Hey everyone, my name is Shrushti Santheria, and today I'm going to explain my topic trend analysis of bank deposit and bank credit in India. Okay, so let me start with the introduction. The banking sector is a very important in economy as bank deposit represents the saving and credit represents how those savings are used for loans and investment. And the main problem here is whether credit growth is matching deposit growth and whether all regions are equally benefiting from this growth. Okay, now moving to the abstract. So here this study focuses on analyzing the growth patterns of bank deposit and credit in India from 2010 to 2018. Using statistical tools like CAGR and OLS regression, I found that business deposits and credit have increased steadily. But there are regional imbalances. Also, there was a structural change after 2014. So, let me go to the objectives. So, here are my main objectives for this study. To study the long-term growth pattern of bank deposit and credit, to compare the growth rate of bank deposit and credit, to analyze trend across different states, means to analyze deposit and credit across different states in the India, to identify the regional disparities, and to study if there is any relationship in the deposit and credit, and to identify any structural changes. Okay, the methodology used here. So I use the secondary data from the RBI data sets, and my study period is from 2010 to 2018, and I have data of different states and union territories in the India from this year of this year's. Okay. And the statistical techniques I used here is CAGR, means compound annual growth rate, to measure the growth. OLS, ordinary least square regression, to model the mathematical relationship between deposit and credit. Mann-Whitney U test is used for the comparison, and skewness and kurtosis is used to analyze the data distribution to see if the data is normal or not. Okay. Here there are two graphs. So let's first move to the key results and findings, then I will explain the graph. So here we can say that deposit has increased and credit has also increased. From the CAGR, we can say that credit is 12.80% and deposits are 12.17%. So we can say that credit is increasing a bit faster than the deposit. Regression output shows that 92.7% of variation in credit is explained by the deposit. And we can also say that in easy terms that 1 rupee increase in deposit, there is credit increase by 0.85 rupees. Okay, a significant structural change was found after 2014, supported by the t-test here. Okay. And from the results, we can see that the Western states are more developed and Eastern states are still developing. That's the reason here the graph shows as these states are still in developing stage, they grow at a faster rate. So here Eastern states are growing at a faster rate. As Western state like metropolitan states like Maharashtra, they are already developed states, so they grow at a slower rate, and north and southern states are balanced. So let's move down to the conclusion now. For the conclusion, the Indian banking sector is stable and growing. It has shifted from class banking to mass banking, as in the in the earlier areas, only urban regions have the banks. But after the liberalization and globalization, the banks started growing in the rural areas and the semi-urban areas as well. However, there is uh, a regional imbalance. Some states contribute to more deposit but receive less credit, which lends to a geographical gap. Yes, it might happen also in this graph. Also, we can see that in eastern states, deposits are very much high than the credit, and in western states, credits are high than the deposit. Uh, this is called a credit drain, as these states receive more deposit, and this state banks gives more credit. So here is the credit drain, we can say that. Okay. So balanced growth is necessary for the future financial stability. And this is my conclusion that Indian banking sector is structurally stable and has successfully transited from class banking to mass banking. However, geographical credit drain exists where savings from state like Bihar are utilized to fund industrial projects in hubs like Maharashtra. Monitoring the gap between credit and deposit growth is essential for future stability. So this is my project, and thank you